Hello guys, welcome back in today's crypto technical analysis, and today we'll do a multiple time frame analysis for BTC. However, before we start, I've got a small request as usual. If you guys are learning and enjoying from the content, do not forget to like the video, and if you're new to the channel, subscribe and activate the bell so you do not miss the accurate market updates. We had a weekly close recently, and I was talking about this bearish engulfing candle. After the white one, which is a bullish one, we closed with a bearish engulfing candle. And I was talking about that as long as we're going to be below those resistance based on a weekly time frame, which is a month that we're following and keep telling about those levels, 33,000 and 36.5. As I said, these type of bullish or bearish engulfing candles, especially this bullish engulfing candles, we covered a lot, and the market got excited about these bullish engulfing candles. Below the resistance levels, these type of bullish engulfing candles have a less effect. However, one after another, you may print a bullish, but after some time, the next week or the following one, you will end up with a bearish candles. So therefore, based on the candlesticks, it's not really something you can expect below the resistance levels. And if you get a bullish engulfing candles or pin bars, you may take an advantage from lower time frame. That might be 30 minutes to 2-hour time frame. Moving on to a daily time frame. Based on a daily time frame, as soon as we lost $60,000, retested it perfectly, and then we saw a massive dump in the market, a little bit of consolidation with a fake out based on a daily time frame, $48,000, where we had 0.382, and we had a higher time frame, the resistance between exactly 48,000 all the way up to $52,000. That was your first rejection, further dump, retested it perfectly, and we tried to print a higher highs. However, we failed, and you saw another massive dump in the market. At the moment, we're just consolidating based on a higher time frame. And we saw since $60,000, massive 70% dump with a current price action over 65% dump in the market. And if you exited right from daily time frames around 50 to 60,000 as well as $48,000, where you don't have to have a panic, because as I said, 25,000 also highly likely we're going to get a rejection. That was another rejection also from 0.618. $23,000 was another rejection. And as I said, it is early for us to talk about the long setup based on a daily time frame. Based on a daily time frame, without claiming $22,000, ideally 22.5, it is going to be early for us to talk about that the daily time frame will get back into the consolidation level. At this time, I'm not expecting that because lower time frames are heavily under the bear's control. Having said that, we've got lower time frame support levels that I'm going to cover in a minute. As I said, the lower time frames are heavily under the bear's control. We might take and print an SFP. We can take this 17,500, the recent low, and take it that with a $17,200, and then we will do a further analysis from there on. Because as you remember, higher time frame Fibonacci 786, that's also another important level. That's going to be exactly $17,200 around this area. 4-hour time frame. Before we do a further analysis, if you want to learn all this technical analysis, what I'm showing, and if you want to become an independent professional trader, or you're interested in the institutional trading system, you can message me via Telegram at Magnate8, and 101 Intense Masterclass is available, where I'm going to teach you how to become a profitable and professional trader in the market. And it only takes you 5 to 10 hours to master this all. During the course, you will learn day trading, i.e. scalping, swing, and as well as the long-term as an investor trading systems. Based on the 4-hour time frame, you had a clear levels exit from the market, first level as well as the second level at around 23,000, 23,500. As soon as we started taking long setup from $21,000 and $21,500, we saw nearly 20% pump in the market, and these levels provided in advance and were played those support and resistance over a few weeks. So the first exit level, as I said, 25,000 and 23,500 dollars. All the way, we had a number of levels. If we're going to take average 24,800 average, that was your 618, the fib level golden pocket, and then higher time frame, the support level, all the way to the daily level. And we came nearly exactly to the daily level, and that provided over 20% dump in the market. And also we followed this fib levels over a few weeks, and we expected as soon as we broke it and we tested the previous 618 based on a lower time frame, we got rejection right from $21,800 all the way up to this level, which was $18,500. And then we started pumping all the way up to 618, that was 22,600, 700 zones. And as I mentioned in the previous videos, as well as the recent post, highly likely that we're going to see a rejection from this level. It's not only because of 618, we had a multiple time frame, higher time frame, as well as mid-low time frame resistance was at around this level. And with the one candle, you can see how we wiped off over 4 days candles. So the important levels based on a 4-hour time frame, as you can see, that's your local low as well as the local high, and you have a 618, the golden pocket. So as you can see, as soon as we touched to Fibonacci level of 618 and we started pumping all the way to the lower time frame resistance level, that's going to be around $19,235, which I'm not paying too much attention at this stage for this level. And as long as we're going to be above local support, and highly likely this local resistance is not going to be an issue, and I'll be expecting right before for some of you may trade based on a FOMC. However, bear in your mind, if you don't know what you're doing, you have to stay away in the next 24 hours because that's going to be heavily volatile. So as you can see, this important resistance is going to be very important. As soon as we're going to claim this level, and highly likely that we might come and test the resistance, that's going to be $20,500 all the way up to 618, another 618, that's going to be $21,000. Take it from the recent rejection local high as well as the local low, and you will get 0.618, the golden pocket. So 4-hour time frame at this stage, heavily under the bear's control. Without claiming this level, it is going to be early to talk about $20,500. And this level is going to be a green ticket. If not, that's not a fake out based on a 4-hour time frame. Without claiming this level, it's going to be early, as I said, to talk about the bullish scenario based on a 4-hour time frame. So at this stage, the level from 618, and as you can see how the 4-hour time frame printed a pin bar and started pumping all the way. The 4-hour time frame, as you can see, we closed for 2 minutes ago, and we literally stopped. We're just having a battle in here in the last nearly 24 hours. Moving on to 2-hour time frame. Based on a 2-hour time frame as well, there's a similar scenario. Breaking $20,000, 2-hour time frame will get back into the consolidation, and without claiming 20,500, it is going to be early for us to talk about the bullish scenario based on a 2-hour time frame as well. And that's a similar scenario like a 4-hour time frame. And if we're going to pay attention to Pitchfork, as you can see, Pitchfork is another confluence right from here, and 618 Pitchfork as well as the upper line of this, the support, it held perfectly, and the price action started bouncing. We came to an end of this episode, and if you guys enjoyed it, do not forget to like and subscribe to the channel. Thanks for watching, and I'll see you in the next one.